Hello and welcome to PGurus channel. I'm your host Sri Iyer. Today we are with Sri R Balakrishnan, a financial expert. And Bala, welcome to PGurus channel again.
Thank you, Sri. Good to be on the channel.
So, Bala, one of the recent news items that I read piqued my curiosity that the Governor of Reserve Bank of India, Shaktikant Das, is going to take a trip to Singapore and Hong Kong to meet in a closed-door meeting with mutual fund owners and other possible investors in Singapore and in Hong Kong. It seemed a little unusual to me. What are your thoughts on this?
I think it is bizarre as far as I am concerned because I don't see a central bank governor going and pitching for money. I think that's been done by people like me who were head of sales or head of research. We go and ask for money. And the job of the Reserve Bank is just to lay down the rules saying yes or no. And I think whatever clarification they need, sometimes the fund managers try to meet the governor and we have never managed to get meetings with the governor either. So the governor used to normally stay away from all this. So this is a new face of the governor, which to me is probably selling the country too easily. I think why should we do that? That is what my concerns are. And why should you go and it's a closed door meeting? I can understand if you are speaking at a lecture out in Singapore or Hong Kong and say that we are easing the rules and make statements like that. But this is, as you said, bizarre is the right word.
That's right. So in the past, the Reserve Bank governor will probably go and meet with other Reserve Bank governors, like Federal Reserve Chairman, Bank of International Settlements or something like that. Doing this sounds highly unusual to me. In fact, the tradition has been the secretary from the finance ministry usually goes for that, isn't it?
It's typically from that side or from even the finance minister goes, I would not mind. But I think the governor going, it's like the regulator it's like the referee coming and playing on the Maidan. So I wouldn't like that. I think, I don't know whether it's a kind of a desperation. I don't think we are that desperate. We are getting good inflows. I think the ground has to be prepared by the groundsmen, which is the politicians, to make sure the funds flow. The regulator cannot do anything except be a referee to what the rules are. So I am really surprised. So maybe there is something else beyond this you and I do not know. Maybe there is more to the visit outside the meetings also.
That's possibly true, especially since the budget is up for revelation in just a couple of days from now. And there's also some controversy going on whether it should be a vote on account budget or a formal budget. And if the RBI governor is going there to soothe some fears, I have no idea. But it certainly is a first of its kind, isn't it?
It is. I think let us wait for the outcome and see. And I think if the closed door meeting remains closed door and no communication outside, then I am free to interpret it the way I choose.
So, so true. So having touched upon the topic of budget, what do you expect to see in this budget, Bala?
Well, I think we never have. I always call it as budget. I have patented that word. So it's basically a kind of an accounting exercise which happens every year where you give projections and nobody tracks the actuals. And there are so many changes in accounting policies. So the budget loses its meaning. So maybe you give some sops like tax breaks or things like that. Even if they were to increase it, I think the gossip is that the tax-free limit would be increased to 5 lakhs. Anyway, the tax on 2.5 lakhs to 5 lakhs is just 10%. So it's not a huge break that way. The other rumor started the grounds today or yesterday is that now the government realizes that the capital gains tax is not a good one. The market is tanking badly. And last 3-4 days, due to a lot of other issues, the market anyway is pulling back a lot of its gains. So there is panic. So they think that the government will come and say, no more capital gains, which I don't think makes sense either way. So I don't think there is great expectations on this budget. So it should be a vote on account logically, but you never know. This government has been very, very different from the past. So they are not afraid to set precedents.
Good point. But so in your opinion, what is the reason for the market pullback, other than the fact that, there is a correction in the United States market too, but the US market correction is primarily because of the friction with China? And do you think that's what is playing out in India, or is this because of there's a controversy going on? Not controversy, but there is a unregulated bond issue by IIFL, which seems highly questionable. What are your thoughts on that?
I have not tracked that bond issue, but I think what is happening is, I think our market is like, for the market, the oxygen is the foreign investors' money. The last 2-3 months, it's been kind of slowing down, or kind of, there is a small negative numbers you see. So in this context, that there is no foreign buyer, the Indian, the retail is definitely not in, they are in through mutual funds. So the institutional money starts panicking when the earnings don't keep up. Plus, I think we've been hit by a sequence of discoveries on governance issue, not that they are new, but now they get discovered and exposed. So one after the other, there's a reason to get hit. And then the margin selling starts. The ILFS thing started the squeeze for the NBFC segment, which has led to a squeeze on margin funding, which was a huge business. So I think it is a kind of a all-round attack. And it is not that the valuations are cheap either. We are still trading at 20-22 times earnings. So it's not a very cheap thing. One other thing I noticed was that there was a small snippet put out by ICICI which showed the comparative numbers of 10 years ago. So there, the interesting thing is the PE is the same, but the return on equity of the Nifty 50 is almost half of what it was in 2008.
Wow, so that's a big drop.
There could be a couple of reasons for some of it. So some of it is explained by the fact that today's index has a lot more weight on the financials. Financials typically are poor earners on capital, which of course investors don't realize. They get carried away by glamour. The best bank will earn less than 20% return on equity, whereas the manufacturer. So increasing the number of companies in the, or the weightage of the financial sector would pull down the ROE to some extent. But what is surprising is on the other side, there has to be some more crack in the ROE, which is why the earnings have dropped so much. So it is not a very cheap market, I would say. So there is no compelling reason to come and buy. And the mid caps, the commodity story is kind of drying out. You look at the graphite twin stocks, I think every day it's hitting lower circuits and things like that. And it is, people are still anchored to a 1-year price and they think, oh my God, let me go and buy. And then they have to start looking at the 2-year high low, 3-year high low, and so on.
How true, how true.
I think a good ride sometimes has to come to an end.
No, but fundamentally, the Indian stock market is quite sound, don't you think? I mean, it has grown by 50% in the last 5 years.
It is. I don't see any problem. I think, you see, we always had very limited quality investable opportunities. We had less than 100 high quality companies. So what happens is the flood of money, and we are a very kind of an OTC market in the global context, because we don't have breadth or depth. We may have 6,000 listed companies, 2,000 traded companies, but if you put a market cap of 10 billion as a cutoff, you are ending up at 100 companies or 200 companies. So it's a very narrow market. But the temptation to you sitting there is that these companies are growing their top line and bottom line by average of 15 to 20%, which is good, because and what is happening is last 2 years, the real growth has been almost the same. but the nominal growth is down because inflation is also down. So the earnings EPS growth as the market wants it is not as much as it should be, because EPS growth includes real growth plus the inflation. So when inflation is down, this number is naturally down. So I think the stocks are in, companies are decent shape. I don't see any problems there.
Now, you mentioned one thing about foreign investors' money taking a pause. Now, could that also be because elections are around the corner and maybe foreign money is waiting to see which way the wind is going to blow?
I think there are two reasons to it. What I understood from my experience being in the markets, I think those controversies or those expectations don't matter too much to them. I think they are more driven by what happens in the western part of the world, where a lot of money is at stake. We are a very small asset allocation for them. So when there is a problem there, I think they would like to focus there and keep their attention away from here. That's what many fund managers have explained to me, saying that, and India has not given them spectacular dollar returns ever. So it's not that it is a must invest kind of a market. So I think it's a combination of both. I don't think politics has a lot to do with it. Though I think if there is a good outcome, there will be a little extra money which comes in and we'll feel very happy.
Thank you very much, Bala. We will again touch base, perhaps for your views on what turned out on budget day. Thank you very much.
Thank you, Sri. Thank you. Have a nice evening. Take care.